So let's walk through this. We're in this article. The one I'm on is how healthcare killed my father. So we'll walk through that. He jumps around a little bit here, so we'll have to jump around on your rubrics. Everybody's got their rubric open, ready to go. So one issue he wants to talk about, and you see it in the rubric. It's an important one on the rubric. Is you need. There's two things here. Look at inconsistent cost and inconsistent quality. You need an example of each of those. All right. It's cost and it's quality. It's both. All right. So he's going to give you an example of cost more than anything else. We'll see several of these throughout. And you would think those go together, right? High cost would be high quality, low cost would be low quality, but there's no correlation. You can spend a fortune and get low quality. You can spend very little and get very high quality. You'll see that in the video I want you to watch. One of the highest quality medical systems in the country is actually also one of the lowest cost ones. But let's look at his example that he gives here. So he says Medicare spends twice as much on per patient in Dallas. Why? Because there's more doctors than Salem does, where supply is tighter. Why? Doctors order more tests and treatments per capita to keep their practice busy. They have that control. This kind of gets under the supply creates its own demand as well, but it fits in this category. Why is this such an important point? Well, what the point he's making, and we'll see it in a few other places, the point he's making is in a truly competitive environment where markets are functioning, you won't see something like this. Why is that? Well, because some competitor will come in and compete with the Dallas doctors and do it for a lower price because they can. They'll be more efficient. But in healthcare, and we'll see why, we'll talk a little about government regulation, which somewhat supports this. So doctors have this control where they can say, hey, you know what? We think we should keep you over for an extra 3 days. And what does the patient say? Why do I care? The insurance is paying for it. So you can see he's giving some evidence that this is not a normal market. This is why one of the solutions is consumerism. How can we make healthcare look like buying a car, buying a radio, buying a computer or whatever, you know, where you're much more cost conscious, you're much more quality conscious. Whereas in medicine, you don't care about the cost, someone else is paying for it. You don't know anything about the quality. You just hope your doctor is sending you someone good. It's a very bizarre market where the consumer really just has no say. We just show up where we're told to show up. Medicare cut. So what if Medicare says, you know what? We're going to cut our reimbursement rate. That's how we'll save costs. Does that save money? Well, look at this. Medicare cut reimbursement rates on chemotherapy. It saved 20%, but Medicare costs actually rose. Why? Some physicians believe their colleagues simply perform more treatments, especially their higher profit ones. Again, the doctors can control the demand because they're the ones that orders. It's very much like you did on the exam with the asymmetry, where the doctors, if your doctor says you need to stay an extra 2 days, here you can say, no, I think I'm ready to go home. You know, you're probably gonna say, wow, you mean I could die if I go home? You know, they can scare you to stay. So yeah, there's doctors, hospitals have a lot of power, mainly because the person they're talking to is not paying for it. So they just want to be healthy. And since they're not paying for it and the health insurance companies don't have much control, the doctor is there on the spot. Yeah, it's a tough equation to solve unless you can somehow get the consumer involved. How do you get the consumer to say, well, how much is it going to cost me to stay 2 more nights? What would, you know, could you get the consumer? If the consumer is going to pay $5,000 out of pocket, do you think they'll ask, do I really need to stay 2 more nights? You know, can I just stay in a hotel across the street? So if I need to, I can run across real fast if something happens. You know, that's the hotel's like $200 a night. You guys are $5,000 a night. Maybe I can just run across the street. So can you get the consumer more involved? And then he says, the way it's currently structured, healthcare demand has no natural limit. I think it does And we're going to see some proof. If you make consumers pay for what they're using, there actually is consumerism. But the way it's structured now with health insurance. Now, I went to a conference, it's been years ago. It was an inflation conference, but I just forgot his name. I always forget names. The famous economist, Milton Friedman. So Milton Friedman, y'all probably think he's been dead for centuries, but no, he was still alive. So one of the guys, I had an actuary with me at this conference, and this guy, Michael, he asked Milton Friedman about the elasticity of demand of healthcare. And he said healthcare has an infinite elasticity of demand. And his argument, this is Milton Friedman. I don't know how to spell Friedman. I should know that, right? Yeah, have y'all watched his YouTubes? They're really quite good. I love it because he gets these really irate people asking him questions and he's never faced. Some of them even screaming at the top of their lungs at him, and he's real calm. Says, well, you're making the point. I mean, it's really good. His are really good. And then he destroys anyone he talks to. He's really, really good at what he did. But he said there is the elasticity of demand for healthcare is non-existent. There's no price sensitivity. Now, he didn't go into detail. Is this really true, or is it true because of health insurance? You see why it's true because of health insurance. If you're not paying for the bill, it's like, yeah, I don't care what it costs. I'm not paying for it. We're going to see some articles that are going to say consumers actually do shop when they have to pay more out of pocket. They actually do ask questions. So we'll talk about knee surgery. Studies have shown that knee surgery, very, very expensive, but 5 years later is no more effective than just rehabilitation. If you're a consumer, it's going to cost you $20,000 for knee surgery, but in 5 years you'll be just as well off if you spent $500 on rehabilitation. Which would you choose? That's the kind of thing. But with insurance paying for it, you're saying, well, with the knee surgery, the pain goes away immediately. With rehabilitation, I got several months of pain, and then it finally goes away. In 5 years from now, I'm the kind of person, like, if I don't have to have surgery, I don't want surgery. So I would go with the non-surgery. But some people, it's like, man, the pain's killing me, just give me the surgery. So the surgery does have the advantage of eliminates pain real quickly. But if you're paying an extra $15,000-$20,000 just to eliminate pain for a few months, you might say, you know what, give me the rehabilitation. So I don't know if Friedman is saying this with the mind of insurance being there, but you can see why that argument, we use too much insurance, why that's a big part of the problem, is going to come up frequently. And I think that's true here as well, because this guy definitely thinks there's too much insurance. That is a big part of his solution. Now, some of you are thinking about the UK, where there's no insurance because it's all public. What is the UK? UK is very different. They absolutely clamp down on what services are provided. If the UK knows knee surgery and rehabilitation have the same outcomes, they're going to say, we don't pay for the knee surgery. Not only that, you can't have knee surgery. They're like really strict. Even if you pay for it yourself, you cannot have knee surgery. So rehabilitation is your only choice. Now, should the US do that? If we know two things have the exact same outcome, one costs $20,000, one costs $2,000, should the government step in and say, you cannot do this one? Would that work? Could they say you cannot do this one even if you pay for it yourself? Can they say that? Would that ever work in the United States? Probably not. But could you say Medicare cannot pay? What would you, as people that are going to bear the burden of Medicare, would you think Medicare should be able to say, we will not pay for the $20,000, we will only pay for the $2,000? Do you think Medicare should say that? And what would happen if Medicare said that? You would have a bunch of pink Cadillacs driving on Congress and the White House. That's what happened in 1980 when they tried to limit Medicare. A bunch of senior citizens, very wealthy senior citizens in their Cadillacs, literally, I'm not joking, in their Cadillacs, they drove on Washington. So it's interesting. But the UK is like, they control it by just saying, no, we will not cover that. Something that may or may not work in the United States.
Would you compare that to kind of how the VA system works?
The VA is really, really interesting. I don't know if there are restrictions, but the VA it's not just single payer, it's actually single provider. It's like as government run as you can possibly get. So how do they control it? I don't know. Can you get knee surgery in the VA? I don't know.
You've got, like, I just recently had hip surgery, so it jumped through 1,000 hoops. And
Hip surgery probably is more effective than rehabilitation. I mean, hip surgery is incredibly because it seems so major. And there's a woman here had hip surgery and she was walking around the next week. And I was like, man, it seems like it's a major surgery. I mean, it's scary to you, wasn't it? I mean, it seems pretty dramatic. That's a big part of your body that they're replacing, but it seems to work pretty effective.
That same thing.
Yeah.
It's the main thing.
So I'm not sure that's the same as knee. You can look it up. I haven't heard anyone saying rehabilitation can replace hip replacement. I've only heard it on knee surgery, so I haven't heard that, but it may be interesting. That's something you could research in your paper if you like to put it in there. But you could see does the UK cover hip replacement? I bet they do.
They do, but like the comparison on like their restrictions on what they'll cover is, I think is kind of comparable, the way you're talking about it, to what the VA does. It's, hey, we think you need it, we'll give it to you. I've actually had civilian providers that I've gone to see send me in for something at the VA. The VA will then determine, no, you don't need it, and they refuse to do what the other provider.
And military are probably more prone to accept something like that. It's kind of we know there's costs, we know there's limits. Yeah, we got to live with it. The American public, I'm not as sure, but yeah, that'd be an interesting case. I haven't thought about that. The VA might have a very different model, which would be interesting. And who's making that decision? Is it some committee of military generals, or is it some physicians? Is it economists? You want some economists in there too, right? So that's a big part of it, is who's making these decisions. And our system right now, it's the people who benefit making the decision. It's the doctors and hospitals. It's the barber asking them, if you need a haircut or not. That's the current system, at least on the Medicare side. All right. So the next point he makes is it feels like you're not paying for it, but you're paying for it indirectly, which is almost the worst case. It's costing you a lot of money, but you don't know it because it's indirect. So he says perhaps the biggest problem with our health-driven regime is the sense that it creates that someone else is paying for your healthcare. But that's not, there is no one else. So what if you took all the profits of the health insurance companies, of the drug companies, the health insurance companies, that's 4 days of healthcare, the pharmacies, that's 7 days. So some people say, okay, Medicare for all, let's take the profits out of this, so we don't have health insurance companies. You saw that in New York City, right? Let's have city-run grocery stores, so we get the profit out of that model. What happens with that model? When you don't, what's the wonderful thing about the profit motive? I mentioned Friedman, he's a big capitalist. What does the profit motive give you? Gives you incentives for what? Innovation, productivity. You want to be better because you get to gain that. What does the government system do? It's like, hey, why do I care? I don't make any more money if I'm more efficient or more productive. So, so what you find out over time, it's true, you have all these profits, but you have this incredible incentive to innovate, automate, digitize. So I think over time, you're far better off when you have that green factor in there, as long as the green factor has a good consumer on the other side to kind of fight the system. And that's part of the problem here, is we've kind of disrupted capitalism with the insurance model. So again, he's complaining about the health insurance driven regime. Keep this in mind with this article. That's probably a pretty important, because he's driving to his final solution, which his final conclusion is far more extreme than the first article. It's similar, but it's just the size of it. So you're not going to solve this problem by eliminating profits, because profits is not a big part of this equation. You may think your employer is paying for it, but they're not. You're paying for it. It's part of your compensation. USAA went out with, your total compensation. They want to make sure every employee knew, don't just look at your salary. We're paying for all this other stuff for you. USAA used to subsidize our lunches. So we got these really cheap lunches. And Bob Davis came in and said, hey, I'm paying for something the employees don't appreciate. So we're not going to do that anymore. you can put a Wendy's in there. They put a Chick-fil-A in there now. They have a Chick-fil-A. Used to be a Wendy's. They got a Subway. And he says, you're going to pay like you would pay for anything else. So we used to get meals for $2 that would probably cost USA $4 or $5. This is back when food was a lot cheaper. But that was his argument is, hey, I'm paying for this stuff and the employees don't appreciate it. Why am I wasting my money? Let them pay their full share. They should pay for their own meals. I don't pay for their breakfasts and dinners. Why should I pay for their lunch? So same thing with healthcare. Your employer wants you to know they're paying for this. That's why these firms do these total compensations. So this gets to his really, really big point. This is a major point of his. I don't know where it fits in the rubric, but over your lifetime, he came up with a number, and this is a few years old, of 1.77 million. That's what you're paying you and your employer together, and your Medicare and your out-of-pocket. You're paying $1.77 million for your families. This is a family, not you individually, healthcare. And the questions he's asking is, if I were to hand you that 1.77 million and say, you can now spend this however you want to for health related, would you spend it the way it's currently being spent? Or would you get a gym membership? Or would you buy walking shoes so you get exercise? Or would you buy healthier food? Maybe you would hire a cook or something. I don't know. I don't know if that's effective or not, but what would you do? So how many of y'all would spend it exactly the way it's being spent now? Do you think it's being spent the most efficient way right now? And what's driving the way it's being spent right now? And I can give you 2 words. What are those 2 words? What's driving the whole reason why your money's spent like it is now? Greed. Tax code. The US is driven by its tax code. Why do we do it like this? Because it's the most tax efficient way to pay your employee. But is that the best way to do it? Should an economy base 16% of its economy be driven by tax code decisions and not by consumer choices and what's most efficient, what's most effective? So we'll get into that. But he's saying there's a far better way to spend this money than is currently being spent. You would probably spend it much differently than you are right now. This probably comes into the consumerism side. I don't know if it fits perfectly, but maybe I'll put it there and you'll have to kind of decide how to work it in. It's under the solutions. It's like the 4th solution down. I don't know if it's going to make sense if I paste it there, so maybe I should add some words. When consumers decide when they allocate the healthcare resources better, differently, and allocated now. I think it fits there. Anyone question why I'm putting it there? I don't know if that 177 is an accurate number. I don't know if it's been inflated because he wrote it several years ago. I don't know what I'll just say there, but it's somewhere in that $2 million range. Kind of depends on your income because Medicare taxes is a big part of that. Remember, Medicare taxes are not capped, so the wealthy do actually pay more. This is one place where the wealthy actually pay more than their fair share because it's not capped. They pay a huge amount for Medicare that will not. In fact, most of them probably use private care even when they're eligible for Medicare. This is a big part of his entire article. So what's the problem? Only about 1/4 of that 1.77 million is going to come out of your pocket, most of that after you retire. And I do know that's true. I can say with family members who probably spent 80–90% of their healthcare out-of-pocket dollars in the last 3 months of their lives. That's a big chunk comes out. My grandfather, he's a big guy, tall and big. I mean, he was just huge. His nickname was Tiny. That's how big he was. His nickname was Tiny. And he was so healthy. His doctors were shocked. He didn't look. You look at him, he didn't look healthy. But he was really, his doctors took his numbers like, man, you're a healthy guy. And then he had one fall one day climbing a tree, 80-something-year-old man climbing a tree. And after that, his health just declined really fast. And in his last 3 months, just constantly in the doctors, a lot of money out of pocket to pay these deductibles. And so you're not going to notice it because most of your life, you're just not paying that much money. You're paying, $50 here, $20 there kind of stuff. And so you're not thinking about the allocation because someone else is paying the bill. But if you're really paying thousands of dollars every year, but your employer is doing it, what would you do if you had that money and could spend it yourself? So most of that is being spent by others on your behalf, deducted from your earnings, deducted from your paycheck as taxes. So he says that's a big reason why the system's so expensive, because we got this disconnect between the person using the system and the person paying for the system. All right, so let's talk, this may be the VA versus the UK versus the rest of the US. Why don't we just have someone come in and control these costs? And his argument is our government is horrible at controlling costs. And why is it? And this is actually one of the rubric items. You search on the word cost, you have to go down a little bit. It says government price controls. So what is the argument here? When the government talks about costs, they actually are referring prices. There's a big difference between cost and prices. So in the 70s, President Nixon put a cap on gasoline prices. So OPEC raised oil prices, gas prices rose, and Nixon says, this isn't good. You can't charge more than 90 cents for a gallon of gas. Anybody, y'all don't remember, but what happened in the 70s to gasoline? Shortage. You had these massive lines at gas stations. Because what did gas stations say? Our costs are the same. You control our price, we just won't provide the product. I mean, that's kind of the bottom line. Governments have to control costs. They can't control prices because prices reflect costs. And so government attempts to control costs are actually price controls, which do nothing, just disrupts supply and demand. What does the medical system do? When you control price, they just start providing a different service for the prices it controls. So they say, oh, I can't provide this service. Okay, well, suddenly everybody has this condition. They don't have that condition anymore. We'll just do a lot more of these and fewer of those. Now, I will say, I am convinced, and I swear I wish we could get President Obama here. It'd be pretty, I'd be pretty famous as a professor. Yeah, I had President Obama talking to my class. I'd love to. I'd love to be, on a 10-hour flight and him being sitting next to me. I mean, the poor guy. But I'm sure there would be a Secret Service guy between us. But I really convinced he understood this very, very well, but also knew politically it was practically impossible. So he kind of threw in the towel. But some of his early conversations, you could get the sense this is a supply problem. But he threw in the towel and gave a demand answer because he saw what happened to the Clintons 2 years earlier, that this industry is really, really powerful. And so, but you control costs. You'll see this, the cost side, how critical this is, and we'll talk about this more. The cost side is huge. You might think the healthcare side, health insurance side would cover this, but the health insurance side really is a cost plus model. They really do just pass the cost on to the employer. So it's really the employer that bears this. So one reason that this doesn't work is a fixation on prices rather than cost. So controlling prices does nothing but the balloon keeps getting bigger. It just gets misshapen. Firms figure out, hey, it's like water. I can't go this way, so I'm going to go this way. Just figures out they're going to make the money they made before. They'll figure out how to do it. A lot of what a lot of hospitals have done is they've shifted costs to their emergency room. Why? Because that's the one that gives them the best press. Say, why are costs so high? Well, we got to take all these indigent people, those people without insurance, they're coming to us, and emergency rooms are really, really expensive. And you look at it and go, well, your emergency room is actually the most efficient part of the entire hospital. It's actually not that expensive. You're just allocating a lot of costs there because that's how you're getting your money back. And so a lot of this is just the accountants figuring out how to shape, move stuff around so you get the same recovery, but the cost of the entire system is just as bad or even more. Cost control is a feature of decentralized competitive markets. Why? So I saw this at USAA. USAA restructured. They're kind of back in trouble now, but Bob Davis cut 25% of USA's workforce. Why? Because our expense ratio was approaching 30% and Geico's was like 18%. You can't have expenses 30% when your competitor is 18%. What happens to USA if its costs are 12% higher? So if you pay $1,000 premium, $180 of that goes to Geico's expenses, but USA needs $300 of that. You can't compete. So what's going to happen? Either USA gets their act together or they go out of business. That's what a competitive system looks like. High cost providers go out of business. But a centralized bureaucratic system doesn't function that way. As a result, strength distortions crop up constantly. For example, although the population is aging, we don't have old people doctors. I can never say this word. Geriatrician, whatever that is. Old people doctors. Why? Because under Medicare's reimbursement, these old people doctors typically don't make much money. So there's not enough of them out there. You control the costs. People say, I'm not going to work there. If I can't get paid what I'm worth, I'm not going to go there. You get a shortage of supply. Medicare is the real customer and it pays more to specialists and established fields. And so seniors often end up overusing specialists who are not focused on their specific health needs. So yeah, it's just like when water running down a hill, you put up a dam, it's going to go some other place. It's going to find a way to get around. Now we're going to say a much bigger number here. This comes to your generation. What we're paying into Medicare is not nearly enough. Medicare is really, really bankrupt. But we haven't noticed it yet because the baby boomers are just now retiring. It's going to start mushrooming pretty fast here, which means your generation's not paying Medicare taxes for your coverage. You're paying coverage for your grandparents. And who knows what's going to be there to pay your coverage. It's going to be kind of scary. So my suggestion is, get in really, really good shape. Move to one of those, what is it? Blue cities? What do they call that? What do you call it? The people that live to 120 because they eat nuts and fish and whatever. Find one of those places, move there, sell your car, walk everywhere, get a job in New York City. Boy, that's the best way to get in shape. You walk everywhere. It's really, really good. But yeah, I mean, your generation, you're picking up the disaster my generation caused, and we don't really have a solution for that. But so Medicare tax and premiums today's beneficiaries have paid your grandparents don't come close to covering their care. So today's workers are subsidizing that. You see that in paper one, right on that third article. The subsidy is getting larger. Next year, there will be 3.7 workers, but y'all saw this in your third article. So this is not just a US problem, it's a problem around the world. The world is aging, they're getting sicker. There's more. I was looking at, I had a schedule of life expectancies and they ballooned dramatically this century. And what our healthcare system has done is gotten people to stop dying around 40 or 50. They figured out a way to handle heart disease and those kind of things and cancers so they can live the 80s, so they can live 20 years with a chronic ailment. And so now we're paying for them every year for 20 years. So it's people are living longer, but not living longer healthy. They're living longer with diabetes and things that we're paying a whole lot for. So almost all countries are struggling with this. even UK is struggling with. UK has gotten a lot of really huge press on how their healthcare system is really struggling. Not to depress y'all, but you know, are y'all, do y'all have the courage to bring this up at Thanksgiving? How nice is your grandfather and grandmother? Be interesting. So healthcare is an exceptionally heavily regulated industry. That is one or one zone. This is kind of a gimme one in the rubric. I forget where it is, but just give me some quotes. Excessive, this is the one right after that one, excessive regulation and bureaucratic paperwork. In fact, this one article would probably be sufficient. So healthcare regulation actually is part of the competition problem, that when you have those barriers to entry, causes large barrier to entry. This is one reason why people are getting pretty excited to see Google, Apple, Costco starting to do healthcare kind of things. Amazon, and we'll talk about Amazon and what they're doing. That's something you could definitely add to your paper to see how Amazon's experiment's going. I've heard some people say it's probably not going as well. Some of y'all probably heard what Mark Cuban was doing. I don't know how that experiment's going. So there are some people who have done really well with reducing costs, becoming more competitive outside of healthcare, that are getting into the healthcare business. And it'd be interesting to see how well they do, or if they get into the system, they just throw up their hands and say, this is hopeless, and get out of it very quickly. But regulation is a big part of it. Almost all of these regulations can be shaped over time by powerful institutions that dominate the healthcare landscape. They're often looking to protect themselves from competition. What do we call that? Y'all know the term for that? Capture, what comes before capture? Regulatory capture, who's that? Nathan? Yeah. Regulatory capture, that's a good phrase. You could Google that and see. It's a little different in other industries. So what does that mean? You're a bank regulator, you really, really want to work for Goldman Sachs. How good a regulator are you going to be when you're with Goldman Sachs? You want them to hire you in 3 years. You're probably going to be, oh, you know, that's okay. So regulatory capture can be part of this. You've seen some pretty powerful members of Congress going and working in this industry afterwards, or becoming lobbyists or whatever. Yeah, there is some interesting doors being open. So I don't need much on that one. That's a pretty straightforward one. We just know there. So layers of healthcare regulation is to stifle competition in this classic economic sense. So yeah, regulation is needed, obviously, in healthcare, but could it be more effectively done? We'll talk later about how much the healthcare system donates to Congress. RFK has been having a field day with this because he knows his peers in the Senate. He says, well, you took $500,000 from the pharmaceutical industry. You know, he's kind of beaten up he's getting beat up himself. It's going both directions, but yeah, he's bringing up that pharma and healthcare is probably the largest contributor to Congress, and it's quite significant. What about hospitals? Hospitals' enormous revenue growth has occurred despite a 35% decline in the number of beds, no meaningful increase in total admissions, and almost 50% decline in the length of stay. They bought a lot of high-tech. We're going to talk about high-tech equipment here in a second. Recovery periods have gotten shorter, so people are saying don't have to stay in the hospital as long. Pharmaceutical therapies have grown more important. And yet somehow hospitals, with all this efficiency, all this productivity, they just keep growing and growing in costs. Does not sound like a competitive market at all. Sounds the exact opposite. Costs should be coming down. All of this is stuff that you see in other industries where their costs are coming down dramatically, and you're just not seeing it. Since charity care, which is often performed in ER, so this is what I was talking about before. ER is one justification for hospitals protected place, and it's hospitals' interest to shift costs from overhead and other parts of the hospital to ER. Because that's their best public relations department. It's like, oh man, we got to take all these people. They don't have health care. They don't have health insurance. I mean, they don't have health insurance. They're homeless people showing up. That's where our costs are so high. And they're kind of wink, wink, wink. Our costs are so high. And obviously we're shifting costs from other places over to ER. All right. So again, he's going to complain about the insurance part of it. So there are ways, and I can tell you the personal experience, the medical care system is woefully inefficient. I mean, just to give you an example. So my endocrinologist, it's an office. I told my doctors that, man, I could really help you on your operations because, oh yeah, whatever. I could tell he did not care. I was like, so I have an appointment. So they call me and say, and of course I'm not home. So I get a voicemail. So we're calling to confirm your appointment. Please call us back. This is a live person. I'll call them back. She's not there. So I say, so-and-so, Heather called me. So Heather's not in the office today. So the lady that answers was really mad. Like, how could you not know that Heather's not in the office today? I'm like, sorry, she called me and asked me to call her back. She's at the office on Thursday. So how could you not know that? It says, well, can I call her? It says, yeah, you can call her at the other office. Well, can you give me the number? And this lady gives me this like exasperated sigh. Like, you want me to stop and give you a phone number? So you see the customer service. Why is she treating me like that? Because I'm not the customer. My health insurance company is. I finally get Heather's number. I call Heather, answers the phone. She can't find me on the system. She's all frustrated. She finally finds it. And I say, well, I'm just calling because you called me to confirm the appointment. And she goes, that's why you're calling? And she's like really patronizing. I confirmed your appointment, sir. So I was like, you called me, asked me to call you. I did that. What could they have done? What does Supercuts do? A text, right? Do you, yes or no? I go on to Supercuts, I confirm, I get a text immediately. I go, my appointment's at 3 o'clock. I get there at 2:45. I leave at 2:55. That's Supercuts. It's not 16% of the US economy. That's Supercuts. It's like 0.003% of our economy. If they can figure that out, why didn't my doctor's office figure? Couldn't he have done the same thing? There's plenty of software companies that will set up that text messaging. Instead, he has nursing practitioners calling patients to confirm appointments. It's irritating the patients. It's irritating the lady that was so exasperated. I understand her problem because I've seen them. They're trying to handle patients. They're also picking up the phone. So I understand why she's frustrated. It's not her fault. She's got a horrible job. All they got to do is spend like $40 a month and they could put that whole thing on text. Probably cut a couple of people from their staff. Why doesn't the system do that? Because they just pass all that cost on to the insurance company that pay. It's a strange system. So he's asking, now you have seen that in some places. We're going to talk about the clinics. I don't know if y'all been to a clinic. What happens when you walk into a clinic? It's a kiosk, right? There's no one there at the front desk. It's a kiosk. You check in. Pretty efficient. Emergency rooms are extremely efficient too. I had to go to the emergency room once. Very efficient. You get through really fast, obviously, because you're about to drop dead, so they have to be a little faster. But yeah, when a system needs to be fast and efficient, it is. But if it doesn't need, there's no incentive for certain places. I've been to doctors, hospitals that are very efficient, very technology driven. Methodist Hospital, a guy shows up with an iPad, clicks everything in, he's gone. I didn't fill out paperwork. Does it irritate you when you go to the doctor and you have 4 forms and 40% of information is on all 4 forms? And you have to rewrite it again. Have you ever thought about what happens to those forms after you fill them out? What is someone going to have to do? Enter it. Why don't you just enter that? Now, when I'm in for an eye exam, they sent me a link. I clicked on the link that filled all the information in. I showed up. I didn't have to fill out any docs. Which of those is the more efficient system? But why doesn't the healthcare system do that? Why does the eye doctor, we're going to get into this. Why did the eye doctor do that and the endocrinologist didn't? What's the difference of those 2 systems? Which one did I have insurance for and which one did I not have insurance for? Insurance for the endocrinologist, no insurance for my eye doctor. Which one was the most efficient? The one without the insurance. All right, y'all seeing where he's going. He's somewhat making that case. My father wasn't the customer, Medicare was. The hospital was able to charge a lot more. Why? Because they infected him. They make more money. I'll tell you, this is a true story. I don't know how they got this quote into an article, but we talked about those checklists, the reduce error rates. And this one guy, he went to a hospital and was talking to the CFO about that. You do this checklist, your error rates will come down. And the CFO said, why would I ever do that? That would destroy my revenue source. This is a CFO of a major hospital understood that infecting people unnecessarily raise their revenues. And he admitted it to the guy. You think he would have found some other way to object, but no, he was like blatantly honest. No, we love injuring our plate. The video I want you to watch, there's a quote in there, I forget the exact word, but it's essentially he says, I make more money when I harm my patients. Now he was on the good side because he said, we're actually fixed that. We don't do that anymore, but we're actually harmed as a hospital because we don't harm our patients. We don't infect them. We don't operate on the wrong side of the body. So this hospital made more money by infecting his father than they would have if they'd done it right the first time. The answer, the hospital discussed price only with the uninsured patients. What about my copay? They would discuss my patient's copay if only if I needed assistance. So keeping price, this is a big part. This is part of the rubric. Keeping prices opaque. I don't remember where it is, but you'll probably find it. You can probably search on prices. I forget, and it's somewhere in here. Oh, right here. Complexity of system and lack of price transparency. That's actually part of the strategy. If no one understands, does that sound familiar? Anything you did on exam 1, does that sound familiar? Like makes it so complex, no one would ever know how bad it is. Sounds like an equity-linked annuity product, doesn't it? Complexity as the strategy so that we can't be regulated, we can't be, no one, government can't control costs because no one understands what the costs are. They can only control the prices. And I'm not even sure how, that CFO, I'm not even sure if the CFO really can really explain their cost charging system. That can you imagine the accounting system of a hospital, how convoluted it is, that probably no one can really explain it. All right, so let's talk about healthcare technology. Technology is the second under the problems. The key here is this phrase, as an example. So in most industries, what does technology do? Raise costs or lower costs? Lower costs, that's normal. So he's going to say in healthcare, sometimes technology lower costs, sometimes the technology raises costs. Let's see if you've been paying attention. When does technology lower costs? When there's no insurance. When does it raise costs? When there is insurance. And that's his point in this section. LASIK surgery. I've had LASIK surgery. Now, I think the military started covering LASIK, so we'll see if that changes it. But it's seldom covered by insurance. I had to pay for mine through my health savings account. I did a tax deduction thing for it. And exists in a competitive environment. So people who get LASIK act like consumers, and the prices have been falling quite dramatically for LASIK surgery. I haven't looked at it in a while. Mine was great for like 15 years. I had like 20/15 vision. It was just so massive. And then it's kind of gone old age. My doctor said, you shouldn't get LASIK again because then you won't be able to see up close. You got a choice. And my choice now is I can't see anything. I can't see far away. I can't see close up. And it's like just this old age. But it was wonderful. I walked into the doctor's. It was kind of strange. I'll walk in, it was a really fast procedure, but I walk in and when I'm sitting there, the electricity goes out. And then I'm next. And so I'm walking, I'm then thinking, what happens if electricity goes out during my operation? But it didn't. It was really fast. It wasn't all that fun. I got home and I was in so much pain. They gave me pain pills. I was in so much pain. I was like, this is terrible. And then I discovered that my goggles were clipped to my ear. I fixed that. Had no pain. I was perfect vision when I walked out. There was no pain other than me accidentally clipping I was thinking, man, this is really painful. But it was very relative inexpensive. It was more expensive than this, but I was a consumer. I shopped around. My doctor's name was Dr. Snip, which I thought was pretty cool. I, I, I was worried about it, but it went so fast that, it was, just the thought of it kind of bothered me, but it went so fast that they did both eyes at the same time. I was out of there really fast. I had to take a taxi home, but I probably could have driven home. It wasn't that big of a deal. Pretty amazing. Other comparable surgeries that are covered by insurance, you're probably going to sit there for 20 hours waiting to get in. You're going to, it's a very different business. It's very technology driven. That's the reason its costs are coming down. They're getting much, much better at it. So the key there is LASIK. He gives one other example. So see if y'all can guess this. What's another example of a healthcare product that's not covered by insurance, whose costs are coming down dramatically, that you'll see a lot of in Hollywood?
Plastic surgery.
Cosmetic surgery. Not covered by insurance, are seeing costs driven down by technology. It's pretty effective, and the costs are coming down. I like what Harrison Keeler said. The 70-year-old women in his city, they all look like 50-year-old women who've had really horrible lives. But it's real effective. It does make them look much younger. And the cost is coming down. You talk to dermatologists, they almost don't even want to see you on the health insurance side. They're making so much money on the cosmetic surgery side, and it's like a regular business. You go in there, for skin cancer or something else, they're like, yeah, you can wait for 20. I got to take care of this person over here. Yeah, it's amazing. When insurance is involved, we'll see this again. Tech is a plaything that raises costs with limited data on effectiveness. We'll see more quotes on this. We'll get into this more. But some of these robotic surgeries, you think, wow, robotic surgeries is going to be much more accurate, more cost effective. It actually costs more. And the evidence is no more, the quality is no higher. But doctors love it. Hospitals love to say, look at this massive thing. You'll see it in the video I'm going to show you. Prostate surgery, that one has some new technology that's extremely expensive. But in most industries, if the new technology is effective, but it's radically expensive, what does the industry do? They're not going to do it. No one's going to pay for it. So, but in hospitals, yeah, hey, $10 million piece of equipment, yeah, we can get our money back. We'll just charge it through the Medicare. So it is a very, very different business. So that's his point here. LASIK's coming down. Technology is driving up costs of healthcare for the same reasons every other factor in care is driving up costs. The absence of forces that discipline even drive down prices in the rest of our economy. Only in a bizarre parallel universe of healthcare could limiting supply be seen as a sensible approach to keeping prices down. Yeah, technology is a great example that there's something wrong with this industry. Now you see the same thing with education. Education prices are going up. Your college prices are going up. It's ridiculous. Is that because they're hiring a lot more professors? Public schools are hiring a lot more teachers. So there's something with public schools, right? That's another system that doesn't have a big competitive side behind it. What are they doing? They're hiring a lot of non-teachers and costs are rising and teacher salaries are flat. There's something wrong. So when you have a lot of government involvement, you get these kind of strange incentives. Doesn't mean the government can't fix it, but because of the way the incentives are structured, they don't have a strong incentive to really fix it. And it tends to be a system that just costs run out of control forever and ever and ever, and people are just shocked. Why is that the case? All right, so what's the solution? So let's first talk about healthcare reform. He wrote this while President Obama was negotiating the Affordable Care Act. So he wrote this before the Affordable Care Act was approved, but he had a pretty idea what's going to be approved. So a wasteful insurance system, he doesn't like that. Distorted incentives, which comes from the insurance incentives. A bias toward treatment. We'll talk about that more. You have someone with diabetes, they can walk 30 minutes a day, or we can give them all these pills and treatments. Walking 30 minutes a day is extremely effective. How much does the healthcare system make on that? Zero. All these pills and treatments, that works. Which would you rather do? The exercise would work pretty effectively, but all the treatments are, so the system has a bias toward treatment, even though there may be other things that are far more effective. Morale hazard, hidden costs, a lack of transparency, curbed competition, service to the wrong customer. The customer is the insurance company. These are the problems of the foundation healthcare system, resulting in a slow rot and requiring more and more money just to keep the system from collapsing. The Obama administration and Congress are still working on details, but it looks like they're working on the demand side. Comprehensive reform. Why? Because everybody's saying we have all these uninsured Americans. So it's on the demand side. But again, I think President Obama absolutely understood the supply side problem, but also understood the supply side power. Said, I'm not going to go there any more than previous efforts. Instead, it will put even yet more patches on the walls of the edifice that is fundamentally unsound and then build the edifice higher. So you push more demand into a broken system, you're not going to fix the system. You got to address the supply side. It's a supply side system that's distorted because of the payment system, because of who's paying for it, which distorts the incentives. Most benefits of technology, record portability, reduction in costly and dangerous clinical errors would likely accrue to patients, not to providers. In a consumer-facing industry, this alone would drive companies to make the investments to do those things. So there's things in the medical system can do that would be far more beneficial to patients, but they don't do them because the patient's not paying the bills. We are patients. We patients aren't the consumers. Government funding of electric records wouldn't change that. So it gets back to my doctor. Why didn't he get more efficient? It's so obvious. He could save so much money. I think it would be in his benefit. I just don't think he's ever thought about it. He's a doctor. I say that knowing that in my executive MBA class, we had 3 semesters where we had a contract with UT Health Science. Those were my best students. I tell you what, those doctors were really good. They understood it, but there's a lot of doctors that don't. They just don't care. There's no incentive for them to make their process more efficient. So, all right. So he's saying the solution is not comprehensive healthcare reform. By that, what he means is getting the uninsured into the system somehow. It's somehow government provision or something. He say that's not the solution because the system's the problem. So what is the solution? So here's the shocking solution. We got time to get through it. So where does he start with? Y'all see it? Move away from insurance. So he's saying reduce insurance. So where does that fit in our solutions? The very, very first one. Insurance should be high severity, low frequency. What's the opposite of this? It's comprehensive coverage. What does comprehensive mean? It pays for everything. He says, no more comprehensive insurance-based coverage. Insurance should only cover now, wait till you see what he says high severity is. You're gonna be shocked. And he wrote this several years ago. So it'd be even higher today. So any reform should put the customer, not the insurer or the government, at the center of the system. If you want to use that as a quote, it would work really well on that consumerism section. Are y'all keeping up with me? No, it's kind of, you have to jump around a lot, but under consumerism, that's essentially a great consumer quote. Reform should be to put the consumer, not insurance companies, not the government, at the center of the system. We got to get you making decisions about your healthcare the same way you do about all your other purchases. So I'm on page 14 of this article. We're almost to the end of it. With routine care, what should you do? Now, here's where I strongly disagree with them, but you should, I mean, I agree with this part of it, but your routine stuff should come out of pocket. He includes that with end-of-life care. So what is he saying? When you save for retirement, you should set aside enough for those end-of-life coverage that you need. That should be out of pocket. He's also including, this is where you can get mad at him, he's also including maternity care. He considers end of life and maternity to be routine. Essentially what I'm saying, it's pretty obvious. It's pretty obvious end of your life, you could get really sick. It's pretty obvious if you're gonna have a family, it's gonna cost you money to give birth. That's pretty routine, that's pretty obvious. You should pay that out of pocket. Massive, we'll see what he means by massive. Remember the previous article, he was talking about $5,000 deductibles. You're gonna see his massive. And unpredictable, it's both of these. It's not or, massive or unpredictable. He says massive and, if it's both of these. So end of life is what? Massive and predictable. Maternity is what? Massive and predictable. So he's pretty extreme. Massive unpredictable expenses to be funded by insurance. What would happen if insurance companies stopped covering maternity care? There'd be a pretty big, and we're trying to get people to have more babies, right? So that really wouldn't help that part of the equation. So you can disagree with him. That was kind of his mode of saying he's on the left, you know, so it's kind of a strange one. So replace, he wants to get rid of employer provided and government provided programs. There should just be one catastrophic program open for all. He actually wants this catastrophic piece be provided by the government. So what does he mean by catastrophic? Are you ready for this? Drum roll. He wants a $50,000 deductible. Now his argument is, did y'all buy anything cost $50,000 in your life? Maybe a car? How do you afford a car? How do you do it? Debt. What is he recommending? When you're young, you set aside money for healthcare because you don't need it. When you're old, you spend that. If you're young and unfortunately have one, then you have to use debt. And then when you're older and you recover, you can pay it back. That's what he's recommending. Is that pretty radical? A typical catastrophic insurance policy might cover anything over $2,000. That is far too low. A threshold of $50,000 or more would be better. Chronic conditions would expect your annual cost above some lower threshold. So if you have chronic, then maybe it's not $50,000, but maybe it's $10,000. What does Ozempic cost a year? $14,000, $15,000. That's pretty expensive. And what happens if you go off of it? It stops working. That's like the ideal drug for a pharmaceutical, isn't it? Extremely effective. And once you stop using it, it stops working. You go back. So who's going to pay $14,000, $15,000 a year for something who we're going to see it? It might solve everything. It addresses diabetes, heart disease, probably addresses addiction. Pretty amazing what it does. Might address Alzheimer's. Some people say Alzheimer's is type 3 diabetes. I mean, it's amazing. Like it might just cure every single thing. Its side effects are pretty horrible, but it's extremely expensive. And are people going to be able to afford $15,000 a year for a drug? Everybody in Hollywood's using it, but they can afford it. How should we pay for most of our healthcare the same way we pay for everything else? Out of income and savings. The government should create a new form of health savings account. Yeah, health savings account is a big part of that first thing. We'll talk more about that. I think I have it in here, but yeah, he mentions it here. He calls it a medical savings account. The big difference between HSA, MSA, the only really big issue, you can set them up with before tax dollars, so they have tax efficiency to them. The big debate on them is what happens at the end of the year with the unspent amount. So with HSAs, if you had 10,000 set aside and you only spent 2,000, 8,000 goes to the next year. There were some programs where, and this is one I had with my LASIK. If I didn't spend it, I would lose it. So you make sure if you put money in that account that you're going to spend it all. So usually you put money in account when you know you have something happening that year. So what people were doing is 0, 0, 0, 10,000. And they're like, okay, I need knee surgery in 2 years. I'm just going to wait, put it all in that 1 year. Which HSAs, the nice thing about HSAs is if you never spend it, it just rolls into your retirement plan. So that's kind of nice. You have an incentive not to spend it, right? That's what you want. Is you don't want to spend it. You want that incentive. Hey, if I don't spend this money, I get to keep it. That gives you an incentive to be healthy, to exercise, take care of yourself, all those kind of things. But then if you need it, it's there. So that's kind of the big incentive. You have a medical savings account where you lose it if you don't spend it. But again, you can go spend it. If you can get LASIK surgery and then you change your mind, you're going to go do something with that money and spend it. So that encourages you to use it, which is not the incentive you want. I set up an HSA for the preacher at my church, and he goes, "You mean if I don't spend it, I get to keep it?" And I go, "Yeah." And he went out and joined the gym. It's like, wow, you should have been doing this anyway, but okay, great. It's like, no, it's my money now. I got an incentive to be healthy. It's like, okay, good. Bizarre person, but yeah. So every American should be required to maintain. He's requiring you to have an HSA, a minimum percentage of your income to it. He puts a floor and a cap on it, but the income percentage required should rise over the working life as wages and wealth do. I don't know if you like that incentive, but that's what he's talking about. He's going to force you to save for those big expenses that are probably going to hit you in your 50s and 60s, and you don't need it now, but he's going to force you to put that aside. All non-catastrophic cares should eventually be funded out of HSA, but account holders should be allowed to draw money for any purpose without penalty once funds exceed some ceiling, and at death, any remaining amount goes to your inheritance. I mean, I'm sure he could be debated, like, oh yeah, you could change this, change this. So, I'm asking you to give me some details on your final plan. What some papers I don't like is I get to the very end and essentially they propose every single solution I have in the paper. I'd like to see your final conclusion is if I were doing this, this is what I would focus on. I want your last conclusion. You can draw on some of those, but you can see with him, he has certain most important things. Let's reduce insurance, high deductibles, more out of pocket. Now he does something that I don't like at all. Well, we're about to get to that one. So what about appendectomy, sports injuries, those things that are expensive, but they're not over $50,000. These should be funded with debt. So his argument is the same way you buy a car. When you buy a car, you got debt, and then you pay off the debt. Now you got the car for a few years. I've only had debt once for like 2 years to buy a car. I just don't like debt. I'm kind of that's the one thing I agree with Dave Ramsey on. But so what I do is I buy a car and I keep making car payments into my savings. And then I hope the car will last more than 7 years. But if it lasts 7 years, I've saved up enough that I can buy the next car with cash. So I'm making car payments, but to myself, so the interest all comes to me. But my cars usually last 11, 12, 13 years. So I could buy a really nice car, but I'm a cheapskate, so I just have a bunch of extra money. So what you need to do is buy your first car with debt. And when the debt's paid off, get that car to last an extra 6 years and keep making the car payments. And then for the rest of your life, what do? You just buy cars with cash for the rest of your life. That's kind of what he's saying is, let's put this money aside. You know you're gonna need it. Let's set it aside. So you pay yourself, you make interest on it. When you need it, you pay out. And he's gonna require you to do that by law. Catastrophic coverage should apply with no deductible. So essentially he's saying when you get above that 50,000, government's gonna cover that. You'll be in some government program and it's gonna cover that. Anyone with whom I've discussed the approach has the same question: how am I supposed to be able to afford healthcare? Well, he says, well, you've already been paying for it. You just didn't know it. You're paying your family's paying 1.77 million. I'm just telling you, stop paying that and do this instead. All right, so that's his solution. Will people really notice that? I've had some students say, hey, if corporations stop paying for healthcare, they'll just keep all that money. But I don't believe that at all. They're going to pay it out to their employees. USAA definitely saw healthcare as part of their compensation package. If they didn't have to pay that, most of it would go back to the employees. I don't really have any doubt on that at all. I mean, it's just the competitive nature of it. Recall that's how much a 20-year-old will pay. And my company should expect to pay. Most of that money doesn't pass through your hands, but it should come to you if the corporation stops paying for that. So there's a second part of what he's proposing. You see it in the solution: untie health insurance from the employer. I am a big believer of that. It got Kamala Harris in a lot of trouble. I didn't like her solution, which was a single payer solution, kind of a Medicare for all solution. But I did agree with her. We got to stop having health insurance paid for by your employer. How many of your employers are going to pay for your auto insurance? Your life insurance, some. How many of your employers are buying your groceries for you? Do you need your employer to pay for your bills? What do you want them to do? Give me my money. I'll decide how to spend it. Your employer says, no, this chunk we'll decide for you. And again, why are they doing that? 2 words, remember? Tax code, right? They're doing that because of the tax code. So they can pay you more and they get a deduction and you don't have to pay tax on it. But it would be far more efficient if they just gave you the money and you decide how to spend it. You might say, hey, I'll put it into an HSA and not buy so much insurance. And I'll come out way ahead. When I did this for my church, what I discovered was if we bought him a high deductible plan, the premium dropped dramatically. So much so that we could fund his HSA and still say we broke even. So this is the way I'd propose it to him. We'll give you a high deductible plan, but we'll put so much money in HSA, you'll be no worse off. What you have in your HSA will cover the deductible. We'll save that amount. So we're putting 5,000 HSA. We're going to save 5,000 in your health insurance. We'll do that for 3 years. Then you'll have 15,000 HSA, and then we'll get to save the money. So that was my argument with him. He says, okay, all right, I can live with that. And then he started complaining about his high deductible. It's like, Steve, don't say that. The church is going to hate me you're better off. Remember the other side of this equation. But that's what companies are doing. They're actually incentivizing people to take the high deductible plan. We'll talk about what employers are doing that we're kind of helping get to the solution. But that is part of the solution. Let's don't get insurance from our employer. More of that you get back to the employee, the more you make them like consumers, because now it's money they've got to make a decision with. I'll put this in not as a quote. We'll find a better quote later, but give the money to the employee, let them decide. So that's greater consumerism. That's the idea. I'm going to try to convince you later if I can get this. It's really hard for me to get the tax code to work on this because it's really complicated. But I'm going to try to convince you that the employer will be better off, or the employer will be no worse off. The employee would be better off, and the IRS would be better off. The employee will make more money after tax, and the IRS will actually collect more tax. So I have to convince you that that's the case, because that just seems too good to be true. So he asked, wouldn't you consume healthcare differently if that money was handed to you and you decide how to spend it? What about lower income Americans? You have some kind of government plan to fill the gap. That's always going to be the case. Lower income people can't put $5,000 into HSA. Okay, so you're always going to have some kind of government provided program. Requiring people to pay directly for routine care will cause some to put off check. This is the part I really disagree with him. He uses this word free. I don't like the word free. There's no such thing as free. For you say free checkups, what you really mean is that doctors and nurses are going to volunteer their time. Is that going to happen? That's not going to happen. Is it free? No, what he's saying is taxpayers are going to pay for it. So I have some problems with this. First of all, giving people regular checkups and the government pays for it. It's a huge waste of money for people in their 20s and 30s, especially guys. You know, if a 24-year-old guy goes into the doctors, they're going to check his reflexes and the heart. I mean, they're not going to check much. They're not going to find anything. I noticed some 24-year-old guys that have like the heart case and they don't find it out until the basketball court. Going to get a checkup is not going to find that. They don't find those kind of things. They're not going to put you through an entire screening when you're 24-year-old. You're going to be in there for like 3 minutes and 12 seconds. So it's kind of a waste of money anyway. So I was saying what a waste this is, but then it's not that much of a waste because 24-year-old guys aren't going to go to the doctor anyway. So it's kind of a wash. But that was kind of the argument there, is more checkups. What we're going to discover is, what does more checkups do? Especially 50-year-olds, 60-year-olds. If they go to the doctor, what the checkup's going to do? It's going to find a bunch of stuff that they're going to get treated for that if they hadn't found, it would have never hurt them anyway. So we're going to see, that's what we're going to call overdiagnosis. The PSA screening, there's a lot of things that we find on, if a 60-year-old goes into the hospital, they're going to find something. That's just the nature of my old 60-year-old body. There's something wrong in here somewhere, but it's probably not going to kill me. Something else is going to kill me. But if they find cancer, what are they going to do? They're going to take it out. Even if it's a cancer that's probably not going to kill you, you can probably make it. It's a very slow moving cancer. They're going to take it out. So checkups actually causes overdiagnosis, actually cause overtreatment. It doesn't actually make you healthier. It actually makes you less healthy. But we'll get into that. That's the overdiagnosis is a big part of our discussion here. Yeah, we talked about technology. All right. We're essentially finished with this, so we're going to do some pretty quick articles after this, and I don't think we have class Tuesday, right? So next Thursday, and then we're going to get into the massive articles. So, all right, finish your paper one, get it out of the way. I'll have the exams back to you hopefully this weekend.